Welcome to RM Smart Investing and our episode of Trading Ideas of the Week. This is for the week of January 31st, 2022. And these are the upcoming opportunities that I can see for the week coming. On Tuesday, we have the first day of the month, which historically has been positive for the markets. And this goes back to 1897 and Dow Jones and all the way to recent years. There is no academic proof for the positivity of the first day and actually even the last day of the month, which is January 31st on Monday. But it probably has to do more with the institutions, the funds receiving end of the month or the beginning of the month flow of the 401ks, and they have to put that money into use. So this is something I want to be aware of, and this applies to majority of the indexes, equity indexes, which is mainly S&P 500. Also, please make sure that the Chinese New Year is upon us. This week will be bank holiday. And just be careful with the copper, because that's obviously China being the biggest users, and there will be a lot of inactivities. There's major earnings coming up. So on Tuesday, we have Google. Wednesday, we have Facebook. And then Thursday, we have Amazon. And basically, these are the plays. You can either use the volatility strategies, or again, upcoming events, maybe you can hold on to after. So that would be another idea. On Wednesday, we have OPEC meeting, and also that the crude oil inventories, which that affects obviously the crude oil and also the energy sector, the XLE. On Thursday also, we have our gold trade. So for the confirmation, just make sure you look at the daily chart, and especially Ichimoku, and use that as an anchor, and then make sure that you watch the 60-minute Ichimoku as far as, again, your entry. The last but not least is Friday, and Friday is a non-farm payroll report coming up at 5:30 a.m. Pacific time. And obviously, this is our strategy that we use for the indexes, and mainly, again, the S&P futures. So, and you can also use options on the SPY if you like. So with that in mind, I hope this is helpful. Before I let you go, I just want to make sure I share this with you, because we just talked about the first day positivity on Tuesday for the start of the month. But I see a lot of similarities between this decade and, I say, the decade of 2000, which is it's called actually lost decade, because the equities they were flat and really didn't make any returns for the decade. So I went back and I looked at from January 1st, 2001 to 27th January of 2010. And this is from Seasonax, from seasonality point of view. As you can see, in that decade, January and February, they were really negative. So I want to also be aware of that. So this is for the S&P 500. These are as far as the study shows, the average return by the weekdays and also average return by the month. So we can see the January and February are pretty negative. So just be aware of that. And if you are thinking of buying the dip, just be a little cautious. On the other hand, also I want to look at Nasdaq, and it's the similar time period, and also again the Nasdaq 100. Again, what we could see is in January and February, we've had seasonality wise, we've had a big down turns, and basically again the Monday and Tuesday are usually negative, Friday is negative. And again, this is just a historical perspective. It's just as a guidance. So it's not, you have to basically analyze each situation independently. So, but history could be a good guiding light. So just watch for that. With that in mind, I very much appreciate your attention. Till we meet next week, have a prosperous and healthy week ahead.